And this is where it gets really exciting for me, because if you add that to the £17,226 I have invested with Vanguard, where this whole investing journey began, then what you've got is a total of over... Hey folks, in today's video I'm going to be taking you through October's update for my Trading 212 portfolio. I'm also going to be touching on my Vanguard update because I have hit a landmark this month I'm really excited to tell you about. I'm going to go through some of my holdings, some of my plans, what I'm thinking about doing next. So if you're interested in seeing how that's all going to break down, make sure you stay tuned all the way to the end. Of course, I'm David from prettypenny.club. I make videos to help you reach your financial goals with chat on investing, passive income, frugal living, generally trying to make your money work harder for you. So if you want to help me get this message out to the masses, then make sure you give that like button a wee dab or share it on your socials. Let's go. So of course here I am in the Trading 212 app. It has been something of an inconsistent couple of months. The markets have been a little bit up and down. I've been hearing people shouting about dips and buying the dip and all the rest. Honestly, it makes no difference to me. I just try to keep my investments as consistent as possible. There's been a lot of discussion on social media about whether this is the next crash incoming. We really don't know when that's going to be. So as far as I'm concerned, the plan has remained the same. We invest as much as we can without really thinking about it too much. Let's just get in to see exactly what has been going on. So my Trading 212 portfolio sits in roughly two parts. One is the general invest account, which I've had since I pretty much started doing this YouTube channel, and the second part is in the ISA, which I just opened this year. So more and more of my stuff in my invest section has been being sold, and I've been moving that over towards my ISA just to buy index funds. So recently I have been getting an awful lot of dividends in, or at least an awful lot of dividends as far as I'm concerned. It's not a huge amount of money, but it all totals up to about 57 quid. So you can see there have been dividends from Persimmon, National Grid, Unilever, Microsoft, Legal & General, Renewables Infrastructure Group, Coca-Cola and GlaxoSmithKline dividend. That last one there just being particularly interesting because I don't even hold the GlaxoSmithKline shares anymore. I just happen to have them at the time when the dividend was announced. So I sold all those GlaxoSmithKline shares, all 36 of them, just at the beginning of September. There is still a little bit of turmoil going on around there. It looked a good candidate for one of those types of shares, one of those types of holdings I'm looking to get rid of just to buy index funds instead. So once that particular investment turned green, £5.97 there, you can see I made on that one. I sold that one and moved it over to my ISA, and we'll see that in just a minute. So overall, this particular portfolio is sitting at around 6,460 quid. At the top of the pile there is Amazon. I love Amazon. So many different ways this company are going to make money, and they're going to keep making money, so I'm definitely going to hold on to these shares, and I will add them if and when an opportunity arises. Coca-Cola is another one. Nice strong company for me, still paying a half decent dividend. What's not to love? iShares electric vehicles, I still believe is very much going to be the future, so I definitely have room for this particular ETF in my holdings. The Global Clean Energy ETF is another one. It has been put to me that I should start to have a look at Clima, which is a little bit more diverse. There are more holdings in that particular ETF, so I might well have a video on that coming up. You can let me know in the comments below if you would be interested in seeing a video around that. It's a possible substitution for iShares Global Clean Energy's ETF. Legal & General, as I mentioned in my last update video, has been on something of a heater the past wee while. I got a good dividend off these guys this month of about a tenner, so very much a holding that I am pleased to have in my portfolio. Microsoft, there's nothing more needs to be said about Microsoft as far as I'm concerned. Microsoft are a huge player, obviously, in all kinds of spaces with cloud computing and with their software. I can only really see growth. National Grid is a fairly steady share of mine. You never really see too much move about in the price in this particular one. That's another one that pays a half decent dividend, and for the meantime I'm going to hold these guys. Palantir is very much one for the future as far as I'm concerned. This one is swinging about all over the place at the minute, and probably for me represents an opportunity to add a few more shares here. You can see there that it's 7% behind at the moment. I have been up as far as 7, 10, 12% in this one, so it's all over the place at the minute, and since I do believe in this company long term, now would seem to be a good time to buy some shares. At a discount, I hate that phrase, but you know, it's cheaper than my buy-in price, and if I do believe in them and I have an opportunity to add more shares to this particular holding, it's probably something I should think about doing. Persimmon is probably going to be one of these guys that I will try to shed when it comes back up towards breaking even. 17% behind on that one isn't great. Still waiting for this big infrastructure boom that Boris has been promising us all. I really think Persimmon would get a piece of that if it ever happens, but we're still still waiting, as I say. Renewable infrastructures, I am so big on clean energy, I can't get past it in many ways, and Trig are one of the first ever holdings I had in my portfolio, so a little bit sentimental about them. If they get back again to breaking even, it's one of these things that I might let go in favour of a clean energy ETF, but we'll see how we go. Unilever is another one that has fallen on tough times of late. Of course, of late, I'm talking about a few months, maybe a year. It's not particularly anything to worry about, it's certainly too short a time frame to get too excited about. But at 7% behind, it's still a bit of a blot on the portfolio at the minute. Van Eck Vector's Semiconductors is one, again, I think probably is going to be alright going forwards. Semiconductors are used in all kinds of technology, and technology is your mate, or at least should be. And Van Eck Vector's Video Gaming ETF is another that has fallen a little bit recently, but still very much something for the future, I think. So there we go, 6,460 quid or thereabouts. Let's just move over into the ISA section. So my ISA is sitting at around £6,465 there, and it is a much simpler portfolio, as you can see. I really only have 7 or 8 different holdings here, and they hold all the money in this particular portfolio. So some things you've seen before: iShares Electric Vehicles, iShares Global Clean Energy, and the Van Eck Vector's Video Gaming. You can see here that the Global Clean Energy ETF and the Video Gaming ETFs are actually behind here, whereas they are in front in the other portfolio. So it's really just a question of when you buy. Over the long term, I'm hoping that it's all going to work out alright, but most of my investment happens in these 5 particular Vanguard ETFs: FTSE 100, the FTSE All World High Dividend Yield, the FTSE Developed World ETF, the FTSE Emerging Markets, and the Vanguard S&P 500 ETF. This is basically where my GlaxoSmithKline money went. It's basically where all my investing goes these days, into these 5 Vanguard ETFs. It's a simpler life. I don't really have time nor the energy to track company upon company upon company, to follow their progress, look out for news, react accordingly. It doesn't suit me. It doesn't suit my lifestyle. It might suit other people. It's not for me. I want something quite passive, and this is it. So I have my Vanguard ETFs arranged in a nice convenient pie. This means that anytime I get dividends, they are auto reinvested. Makes it very, very simple. You can see there's been £41.23 of dividends so far. So when it comes to actually investing in this pie, all I need to do is throw a particular amount of money at the pie, and Trading 212's functionality will work out how much should go to each pie based on the allocations that I have set. All in all, that's a pretty cool feature and makes it very, very easy for someone like me who just wants to invest their money and not have to think about it too much. So when you smash those 2 portfolios together, what you get is about £12,925. And this is where it gets really, really exciting for me, because if you add that to the £17,226 I have invested with Vanguard, where this whole investing journey began, then what you've got is a total of over £30,000. So I have broken through the £30,000 invested in the stock market barrier. This is great stuff for me. The goal for the next 8 years or so was to get that up to 100,000. I don't think that that's necessarily going to happen for a number of different reasons, but here we are, we're through 30k and we're just going to keep on going. It's nearly 2 years to the day since I started investing with Vanguard. I've deposited about £14,000. Overall, my internal rate of return has been just over 30% and has returned me over £3,000 in that time. £3,000 I wouldn't have had otherwise. Investments, of course, can go up and down, but my goodness, I'm so glad I started this when it did. Compared to the pathetic interest rates you're currently getting with your bank, over the long term, I'm hoping that investing my money like this is going to provide a much bigger return than any bank could ever offer. It's not without its risk, so make sure you're doing your own research before you get involved in any kind of investment. Trading 212 are still not open for new UK customers. I believe they have opened their doors for Europe, so hopefully the UK isn't too far away. It's a little bit strange. I really don't understand it. I don't really have any more information than what you can find on their website. It's a little bit of a risk for them as far as their business is concerned, I would think, looking from the outside in, because there are tons of their competitors offering great products and still obviously have their doors open to UK customers. So there's plenty of choice out there. Make sure you're making good ones if you're trying to invest. Make sure you're doing plenty of research. In the main, I have found Trading 212 to be very useful. It has some great tools in there. It gives me up-to-date information on what I want to know about, and it's very easy to navigate the app. As I mentioned earlier in this video, my investing is all about trying to keep things simple, and Trading 212 are helping me do that with things like their pies, with their auto investing. all those kinds of things that make it simple for me to maintain a hands-off approach to my investing. But look, £30,000, I'm excited, onwards and upwards. Let me know how you're getting on with your portfolios in the comments below. Don't forget to leave a like if this video has brought you any value. Share it with your friends on social media, get the investing message out there. Thank you very much for watching. I will see you in the next one.